Are higher interest rates actually slowing buyers down in the 2025 Minnesota real estate market?
Yeah, so as far as, right, we're in May right now. What we've seen for this spring market is kind of the exact opposite, actually. I think kind of what's happening is people are getting used to where we're at, the 6.5%, 7%. A lot of people have a lot of equity in their houses and don't necessarily want to be there forever.
Right.
So they're putting that capital to use and starting to get out and finding properties. I think early on when interest rates did make the big spike up, people were just in this waiting phase. And we have so many people kind of had been sitting on the sidelines. They're slowly and all coming back. So we're seeing a lot of buyers out there. We're not seeing a ton of inventory. We're still kind of low on inventory, which is the big reason for it moving as quickly as it is right now. But we're just seeing more and more buyers kind of evenly kind of coming out. I have this fear of if interest rates do start to drop, if they drop dramatically, right, or quickly, there's going to be an overload flood of buyers to the market. So right now, kind of specifically, it really still feels like it's a great seller's market. It's been hard for buyers, it's been multiple offers on a lot of when it's a good property and buyers are having to compete. So I think the narrative of interest rates slowing down the market, tariffs, right? All of those things that we're kind of hearing of pushing people over to, I'm not going to buy, the real estate market isn't going to start going down, right? It hasn't been the case at all.
Right. What do we see with the interest rates coming down? Do we think we'll see more inventory because of that?
Yeah, so that is kind of that.
The golden handcuffs that we always talk about.
Off, right? We've talked about that. A ton of people in that 3% interest rate where it goes, if interest rates were lower, I would make this move. Kind of the reason for a lot of people sitting on the sideline. They say there's kind of this sweet spot if we hit under 6 that a lot of those buyers will start to go, okay, this makes sense for me to do.
Those sellers now become buyers, and all of a sudden, hopefully, then we get some more inventory, which balances our market out a little bit.
Which opens it up a little bit. I think that interest rate coming down, sure, will bring some more sellers out, but those sellers are going to be buyers as well.
Correct.
Right? And I think it pushes up another price range, but I think that just opens up even more buyers that are renting right now.
Right. I think there's so much pent up demand that we have with the current buyers that are out there and that have been sitting on the sidelines waiting for that rate to drop. And obviously with prices going, it keeps pricing them out of certain price ranges. So rates drop. I think we may see more inventory, but I think we'll see way more buyers still continue to come out.
They're going to eat it up pretty quickly. But I think when it comes to the people that aren't making the decision that maybe want to, right, I think it is a little bit more on the side of sellers where they do have a house and they go, I don't want to sell because I don't want to leave what I have here. It doesn't make sense for me to, increase my mortgage by $1,000 or $2,000. So I think there's a huge sideline of people there that would.
Yep.
But then I think you think on the other side too, you have a ton of renters to go, man, if I could have something, if I could get something that's affordable for me, right? So I think that you're going to see a lot of them coming out as well. I think it still pushes the market kind of up is what ends up happening on that.
Correct. I think it'd be a long term. We'd have to have rates down for a long term to get a lot of the buyers out. I think we'd see I don't want to say giant increase, but I think the market would continue to rise before we finally got enough inventory to kind of balance our market out a little bit.
I think that's been the thing that we've talked about for a long time of going, hey, why aren't prices going down when interest rates jumped up so much? Right? It's that lack of inventory. And then it goes, well, where is that inventory coming from, right? I think some of the things I hear is, how are people affording these houses, at 7%, or the people that bought during COVID that spent $30,000 more for the house, right? People have got to be pushing their budgets all the way, and we haven't seen a big uptick in foreclosures or anything.
No.
Right? We don't have scary part of the market where we're going to see a ton of inventory hit the market for, foreclosure reasons or affordability reasons, right? A lot of people are actually comfortable with what they have right now. So we just don't see that flood of inventory kind of coming from
and
anywhere.
the amount of equity that people currently have in their mortgage. They're figuring out how to, make these payments and do what they need to do to keep the house. So
so I think until we catch up on inventory, which is going to take a long time. It's kind of held it, you know,
It's been a
regardless of
4-year conversation standing in front of this mic talking about it.
yeah, of where's inventory going to come from? How do we balance out this market kind of thing,
Yep.
right? And it's, man, I don't see a good way of it happening.
How many buyers we've had. I'm going to wait for these rates to drop. And I mean, they would have gained 30-40% equity since then.
No, I think that's usually kind of the conversation I end up having with people is going, you know,
If not now, when?
yeah, it is the if not now, when, where it goes, you know, hey, interest rates will be, I'm going to wait for interest rates to drop far enough. And then, you know, that was 2 years ago.
Right.
And they end up being in the market right now where, you know, they probably even get at a higher interest rate than they were then, but also they have that, you've had appreciation in the market. So it's 3-6% more expensive now.
Right.
The conversation is always this is like, if you're in a situation where the next place is affordable for you, right, and you want to do it, is don't wait for something magical to happen because we don't know, actually.
Correct.
Right? Of what's going to happen.
Right.
But
If we did, we wouldn't be sitting here.
yeah, right? But I think most signs lead us to it's going to keep appreciating up slowly, hopefully not dramatically, right? So it's time in the market of getting in your house sooner, earlier.
Yep.
If rates do drop, you can refinance. But I think that waiting game, man, I remember all those conversations when I started like in 2017 of, hey, foreclosure crisis has kind of just gotten done. And the amount of people that we're talking about, I'm waiting
It's
for
going to happen again.
another one of those to
Yep.
happen.
Then
And it just-
pandemic hits, and here we are.
yeah, and the exact opposite happens, but you could have got a super low rate. Like we had like almost like a really great buying time period that didn't look like that at all when we were in it.
No.
And that's the
Correct.
big thing I try to bring to people of having that conversation of like, okay, back when housing prices plummeted and they were as cheap as they were going to be in 12, 13, you know,
Right.
2012, 2013, it's like, would you have known? Would you have jumped into the market right then? Right? Did anybody know that was going to be the best buying period
The bottom,
ever?
right? The bottom of the market. Interest rates are super low, and prices are even lower.
Right? And everybody you talk to was like, oh, I wish I would have bought 7 properties during that, right?
Yep.
Now it's kind of being the same thing of like, man, I wish I would have bought more properties during COVID era, pandemic era, because interest rates were so low. It's always hindsight of knowing
Right.
whether or not it was a
Right.
great choice or a good choice. That's the tough part, because also when we look at this market right now, it's like, who's to say, what if rates decide to go up a lot,
Right.
We end up realizing like, wow, this was the best buying time period we had in the last, you know, we look at 10 years from now, it's like, oh, that would have been great. Or,
Right.
You know, should have done it then, you know, this is even worse. kind of
Nobody
thing.
ever thinks about, they're waiting for the rates to drop. We never talk about the rates going to 8, 9, 10%. Not that I've ever heard that, but
let's hope
let's
not.
not put the fear out there. But yeah, nobody's had that conversation.
No,
so.
I know. But I think that's kind of what you realize when it comes to real estate. You don't know until afterwards if it ended up being a really good idea, right? And you can look back sometimes. And I think I have this conversation with people. It's like, if you would have done this last year, would you have been in a better position, right? And so many times we keep going back to going, oh, I wish I would have done this 3 years ago.
Right.
I wish I would have done this 4 years ago. If your income and lifestyle is all the same, like, just keep that stuff all the same, right? Going, man, it would have been better. I wish I would have bought another one. I wish I would have bought my house that I have right now back during pandemic. It would have been better for me, right? So I think when it goes to trying to guess what's happening in the future, it's really hard to. We look at it all the time and you'll hear 1,000 different things, and one little thing that might be bad, right? You're like, oh, that's going to happen, right?
That's going to change this market.
Somebody put this out, right, that said, CNN or something, right, said that housing market's collapsing. All right, perfect, great. I'm going to have my time here in 3 months, right? And then it doesn't happen, right? And it's like, oh, shoot, maybe I shouldn't have listened to that. I think it's that of always just looking at your situation and figuring out what's best for you. Can you do it now? And is, in reality, if nothing changes, will next year be better for you?
Is the timing now right for you and your family to make this move and have this happen?
When it comes to the purchase of your primary residence, I lean more toward on, does this make sense for you and your family? Let's not look at all the economics of what it could be or what it's going to be.
Right.
Make sure that you're in there long enough where you can make it work. You
Yep.
know? And even on the investment side of things, it goes, man, if you can get something now, great. If it can cash flow, if it can be somewhat profitable and you can hold on to it for a long period of time, that's what makes
The
sense.
long-term equity is going to outweigh the short term. So
Right. So I think it's always looking at it from that perspective. Different conversation, obviously, when I have somebody that goes, hey, I'm only going to be here for 2 or 3 years. Like, we got to make sure
we're buying
that-
the right property
that
then
we're
at that
buying
point.
the right property,
Yes.
that we're finding something that we can add value to.
Yep.
That's the biggest thing. And it's not on, hey, I think rates might go down a little bit a month from now or 6 months from now. Let's
Right.
wait until that period, because the amount of times we've heard that they are going down and they don't.
They go the opposite
They
direction.
go the opposite direction. It's like, we really should have done it back then, right? Trust your gut, I think, on it a little bit more and what makes sense for you rather than what you think the economics are going to be in the future, kind of thing, right? For a free report on the estimated value of your house, click link below, type in your address, and once a month, send out a report on estimated idea of what your house is worth and different metrics of your market local to you.